Hello, today we are going to do the accounting systems. Uh, Keeping systematic records is something which is required by the all business entities, and most important therefore for them is to keep these entries, keep these financial transactions and events recorded in a manner that they can be extracted at any point of time, wherever and whenever they are required, in a manner that it becomes very easy for the management and the uh, all the stakeholders of the organization to analyze those statements. Hence, uh, accounting is all about keeping the financial records and transactions in a very systematic order, which can be done through ledger accounts and ultimately preparing the final accounts. Now, another aspect which becomes very important over here is that the uh, business entity is such that the interest of the stakeholders are to be kept intact. This business interest is in terms of the assets of the organization. So, the business accounting needs to keep the interest of the stakeholders intact, that is the property of the business intact. Therefore, it is to be protected from any unjustified or unwarranted use, and hence accounting steps in over here to create a systematic information record, which therefore protects this interest of the stakeholders. Meeting legal requirements is the next important aspect of and the function of the accounting, which is required by almost all different stakeholders in terms of the requirements of the different governments. Like for example, the uh, the country's central bodies, like for example the central excise tax, or the local bodies, that is the municipality taxes, etc. What octroi, tariffs, these are to be kept, these are to be recorded, and hence these are all to be recorded and communicated on the basis of the financial events and transactions which has been recorded. Therefore, the accounting does undertake this function also, that it requires to adhere to the established requirements which has been wanted by the, or which has been enacted by the country's law. Next important aspect for the accounting is the accounting cycle. Now, by accounting cycle, we mean to say that recording the transactions first of all in the subsidiary books, and these subsidiary books, as you know, are the purchase book, sales book, cash book. Cash book is a special book which is also a ledger, purchase return, sales return, bills receivable book, bills payable book. So, these the accounting cycle requires that first of all the transactions are required in these are recorded in these, and those entries which do not come in these are recorded in the general proper, and therefore this is the initial stage of recording of the financial transaction. Hereafter they are classified. Then these, once these events have been captured, they are, henceafter they are classified. Uh, and this classification therefore leads to closing of these books and then transferring them to the ledger accounts, which further takes it to the trial balance. Like for example, a credit purchase. The credit purchase will be recorded first of all in the purchase book. From purchase book, it will go to the purchase ledger, from where the entries will also come from the cash book in terms of cash purchases. So, the cash purchases will be recorded in the cash book, which will terminate, which will enter in the purchase ledger. Similarly, purchase book will have the total of all the purchases which are on the credit basis, which will also be transferred to the purchase ledger, and the purchase ledger total will show the total purchases, that is cash purchases and the credit purchases, which therefore goes to the trial balance, from where the final accounts are prepared. Now, what is the system of accounting? The system of accounting works on the cash system. That is, whatever the cash has been generated, that is recorded, and on that basis the transactions are entered in the different books and the information is captured. Uh, there is also a system which is known as single entry system, and the other is the double entry system. Now, double entry system basically is the one which captures both the sides of your transactions. So, it starts with the subsidiary books, classification of the data by posting them from subsidiary books to the accounts, closing the books, and preparation of the final accounts. The cash system. Cash system takes into account only cash receipts and payments on the assumption that there is no credit transactions. That is, only cash movement is recorded. Even if there are any, they will not be recorded. That is, any credit purchase or sales is not being recorded. It will be recorded when cash is transacted. This system may be suitable for charitable institutions like schools, colleges, social clubs, etc. And generally, all the governments also function on the cash basis, not on the accrual basis. Single entry system, as the name itself implies, it deals with only one aspect of the transaction. This system recognizes cash and personal items of the transaction and it ignores the impersonal items. So, it is incomplete, inaccurate, and unscientific. Now, double entry system, which is the mainstay of all the accounting systems all over the world with all type of organizations, is the most important one, which is also very scientific, which can be checked, which does a kind of a self-balancing and self-appraisal to see whether the things are correct or not, because every transaction has two aspects. It's not that there can be a benefit of only one person. If certain value has been exchanged, then value has to be delivered at both the sides. If I purchase something, then if I am going to utilize that particular good or services for my own benefit, which I have valued in certain terms, then I need to pay for that also. Maybe immediately, maybe later on. Later on, if then it is called as credit. But if in the cash form, then the transaction happens almost immediately. And most important in this transaction, therefore, is that how these values have been exchanged. This is the most, as said, the most scientific system that recognizes both the aspects of each transaction and also records each aspect. This system takes into account every business transaction in its double aspect, receiving benefit by one party and giving the like benefit by another. So, it records the twofold aspect of every business transaction, as I have given an example. Now, let us take another example which you can also read from here. The example is that when A purchases a car, he receives the benefit in the form of a car and gives the benefit in the form of the money. Similarly, the car seller receives the benefit in the form of money and gives the car in return. So, one has received car which he is going to utilize, which he values, which he understands is of some importance to the purchaser. The seller wants cash instead of the car. That means he wants this utility now to be exchanged or now to be changed in its form. Earlier it is in the asset form. Now he converts it by selling it into the cash form, liquid form, which can be again exchanged by him in some other form. So both the aspects are there. Both person has benefited, and they have arrived at this benefit by agreeing to a particular price of the asset, which has been valued by both of them as important. Now, therefore, we can finally define the double entry system. The process by which dual aspect of business transaction are recorded is known as the double entry bookkeeping. It is complete bookkeeping in the sense that it records all the two aspects, debit and credit, in each business transaction in equal value. Now, classification of accounts. Every business deal with other person possesses assets, pay expenses, and receive income. So, from the above, we can see every business has to keep an accountant for each person. An accountant account for each asset, an account for each expense or income. Accounts in the names of a person are known as personal accounts. Accounts in the name of assets are known as real accounts. Accounts in respect of expenses and income are known as nominal accounts. Another way to understand them is also that whenever the transaction happens in credit basis, then we need to record that, say suppose we have purchased something from somebody and we have not paid anything to that person, then that person has done an obligation to us by passing the asset to us without taking the equal value, and hence we need to record his name or her name or the company or organization's name, that we have to still pay that value. The double entry system has not been fulfilled in its fullest term. So we need to pay. So we need to uh, consider that person as a creditor, that to whom we are going to pay. Similarly, uh, if the sales has been done on the credit basis, therefore we will record the name of the person or the organization or any other entity to whom we have sold. We have done an obligation that we have given them the asset or the services without taking the money, and hence we need to record the name of that person, entity or thing. So similarly, nominal account is something where the intangible transaction is recorded. Intangible in a sense that you cannot touch it, or you just understand it, you just feel it. Like for example, salary or discount. You can understand the meaning of that, the impact of that, but you cannot touch it, or in its expense form, that is salary or a discount or commission. The mode of payment or receipt can be cash or through a check. That check or cash is the other part of the transaction. Cash is a real account, but bank is a personal account, but because bank keeps the money on our behalf with itself. If you go to the definition of the check, you will understand that bank is somebody who is going to keep our money with them, which they will pay or receive on our orders, and therefore bank is a personal account. Similarly, nominal account is the one which is intangible. Tangible is your real account, which we can touch: a table, a computer, cash. These are all the example of tangible accounts. So we have three accounts. One is real account, personal account, and nominal account. Now, therefore, as you see, the classification of the accounts are personal or impersonal, real or nominal. Now, let us take all the accounts in much more detail. The first one is the personal account. Account in the name of a person are known as personal accounts. Why do you need to record it? I have already deliberated upon that. Whenever the transaction happens, where we need to keep the name, then it is to be recorded. Like for example, purchase has been done on the credit basis. The examples are RAM account, measures RAM and company account, bank account, etc. That is, credit transactions, name of the person is to be recorded, or wheresoever some benefit is being transferred to. Now, the other account is the real account. Tangible things. Tangible are those which we can touch and see, like table, chair, furniture, computer, motor van, building, machinery, etc. Uh, there are certain intangibles also, like for example, goodwill of the organization. That cannot be considered, because you cannot, uh, see it. It is something which you have to understand. Nominal account is now in that category which we call as intangibles. Intangibles in a sense that you cannot touch them, you have to just understand them. They are impersonal, but invisible and intangible, like expenses and losses. Whenever there is a loss on an expense or an income, you can just understand it, like a benefit which is accrued to you. You have worked 1 month for an organization. Now the salary is to be given to you. It is to be paid to you. It has accrued. You just understand that that benefit has happened, In what form it will be paid, that is another thing. That form may be the real form or it may be personal form. If it is given in the form of a check, then it is a personal account, because a particular bank now holds the amount which will be paid to you. But if it is in cash form, then it is a real account, because you can touch it, you can see it, you count it, you put it in your bag, you put it in your purse, and or you deposit. Once you deposit in the bank, then it becomes the personal, because the bank is now has the is the one which is going to keep it and which will pay it or to anybody or to you on your order. It's not the bank's own money. Bank keep those things distinct: the money of its clients and the money of its own self. So the nominal accounts have the examples of salary account, wages account, interest received, commission, discount, etc. So we have two sides, debit and credit. Each account has two sides, left side and the right side. In accounting, the left side of an account is called as debit side and the right side is called as credit side. The entries are made on the left side of an account is called debit entry. If they are made on the right hand side, then it is known as credit entry. So how do we govern these transactions, and how do we record them? We record them on the basis of first classifying them into either that if they are real, personal or nominal. Now once you understand that this is the classification, the second question comes in that what is the rule pertaining to that particular classification. For example, you have sold a water bottle to somebody for rupees 15. So you have sold, you have given a tangible asset, a tangible thing to somebody, which the customer is valuing, and he has paid the commensurate or the equal amount of value to you in terms of 15 rupees. Now both the things are real. Water bottle is real, cash is real. So these entries are to be made on the basis of certain rules. What does the rule of real account says? Debit what comes in and credit what goes out. So the purchase of the sales of the water bottle is the goods which have gone from you. Goods have gone and cash has come in. Debit what comes in, debit the cash, and credit the goods which have gone. Now because it is your main business, so you distinguish this good from any other transaction in terms of that you call it as sale. So sale is to be credited. If you are in the business of selling only water, but if you sell something else which is not the main purpose of the business, or the organization has not been made for selling those items, like for example you are a furniture organization who who make furniture, manufacture furniture and sell them, then sales of the furniture will be considered, and any other sales, say suppose you sell computer, then that computer will not be called as goods which are classified as sales. Okay, so this is what is a real account. The next is your personal account. Suppose the same transaction, say suppose we have sold, this furniture mart company has sold a table to somebody, to Mr. A. So table have been given, table is a real account, and this is our main business, so we call it as sales. Credit what goes out, so we have credited it. But on the debit side, what should we write? We have not received the cash, but we have received an undertaking, a promise from the customer that this amount will be paid to you after 10 days, 15 days, or whatever has been the understanding. So we need to record this name. We'll record the name that from Mr. A, we need to take this much of amount. So this is a personal account. What does the personal account say? Personal account says that debit the receiver, credit the giver. So here the person to whom we have given something is the receiver or the giver. It's very clear that this person has received the benefit. So debit the receiver. A is to be debited and sales is to be credited. Similarly, we have the third account, which is the nominal account. debit all expenses and losses and credit all gains and income. Suppose you have received a salary. A salary is an income to you. So salary have been received, and that has been received in the form of cash, say suppose. So cash is a real account. Debit what comes in? Cash has been debited to the salary, because salary is your income, a benefit. So therefore you have credited it, because the nominal account says debit all expenses and losses and credit all income and gain. So it's very simple that first of all you have to see that what event has taken place. Once you understand that this event has taken place, then you need to understand that can these events be captured in form of financial transaction which can be measured in terms of money. If that is so, then you need to classify the second thing, that you need to locate that which one of these three will be utilized for the transactions. Transaction has now two sides. So you will have to see that each side you will have to check whether real, personal or nominal will be used for both the sides, and therefore you will decide that which account is there, nominal, real, personal, and that once you decide that, then you have to apply the rule of that respective classification. So this is how your first transaction gets recorded. Now we have steps for finding the debit and credit aspect of a particular transaction. As I have already said, find out the two accounts involved in the transaction, check whether it belongs to real, personal or nominal, and then apply the rules of the debit and credit, and hence your journal entry is passed. Now you can go through this simple exercise for your practice, so that you can see that whether you are doing it correct or not. Okay, like for example, purchase a building for rupees 20,000. The exercise, purchase a building for rupees 20,000. So what has been purchased? A building, tangible, real account. Debit what comes in, credit what goes out. Debit what? Building. Credit what? Cash. Cash paid 20,000 rupees. Similarly, paid cash to Satish. So Satish has received the benefit and cash has gone out. Satish account debit to cash. Similarly, paid salary. Salary is something which is nominal. It has been, let us suppose, has been paid in cash. Therefore, cash is real, but salary is nominal, because we just understand that this is the expense. If I am the employer and I am paying somebody salary, that salary is an expense for me. So therefore, I will debit it. Salary debit to cash. Now, similarly, the other fellow or the person who has received the salary may do it otherwise. That he or she will record the transaction like this: cash account debit, because that's a real account. Debit what comes in to salary. Salary is a benefit, gain, income to that person. So therefore, it has been credited, which is governed by the nominal account rule. Similarly, received commission 250 rupees. Now let us suppose this again is in the cash form. So commission has been received. We have received the commission. Commission, we understand, is our benefit, and therefore the this is to be credited. So commission is credited. Nominal account, debit what your expenses and losses, and credit your income and gain. So therefore commission is credited. And what is debited? Cash which you have received, which is a real account. Debit what comes in. So cash account debit to commission. Similarly, goods sold for cash 3,500. Now here again you should apply the rule that goods, we call goods those things in which we are dealing in our business. Say suppose it's a furniture business, then whenever we sell furniture we call it as goods, and we call it as that this is the sale. Okay, so although it is a real account, but we say it as sale. So this real account has a actual name of sale, so that we distinguish what is a sale. We do not add all any other things in it. Like say suppose we have sold a computer also, but that is not my main business. Therefore, that is to be kept separate, so that when we calculate what is the benefit from the sale, we can understand that this benefit is from sale and not from selling computers. Therefore, the sale is captured. Whenever there is a sale, goods are given, and therefore this is real account, and therefore it is credited. Okay. Now for cash, cash is again a real account. Debit what comes in. So cash account debit to sales. I think that this exercise would have helped you to understand some of the basic aspects of accounting. Now, it is very important for you, as you must have already done in the course, that you go through this practice from other books, so that you are very clear with the accounting system, ledgers, trial balance, profit and loss. Only then we can move ahead to utilize it for our international accounting standards. So let me summarize the subsidiary books again for you. The first is the general, special journal, purchase book, sales book, purchase return book, sales return book, bills receivable book, bills payable book, cash book, and petty cash book. Now, what is a journal? Journal is something which has these 5 columns: date, particular, ledger folio, debit amount, and credit amount. Date, whatever is the date of transaction, it is recorded. Particular, then what? Debit, say suppose I have debited the salary account or cash account, whatever, that is to be written. So, particular captures the language form, that is, if it's say in Hindi, then in Hindi it will be written, or it's in Tamil, then it will be written in Tamil, and therefore it may be on the regional language basis. But the recording is to be of that language, has to be over there in this particular column. The next column is that of the ledger folio, that this transaction which we have maintained, they suppose salary. So salary in the ledger book will have a particular page, so that we can immediately, whenever we want to see all the salaries paid or anything pertaining to the salary, look at this ledger folio, which page it is, and we can immediately pinpoint that here it is, and we can check that that transaction or the total of that page from that particular information which is recorded in the ledger folio. This is the practical aspect of the accounting. Now, similarly, the thereafter it is to be recorded in the debit or credit. So, this is how your one journal entry is completed. At the end, you have to write the particulars. Particulars generally in the studies is considered is something like being sales, credit sales made to Mr. A, and so on. But it has a very important aspect in the practical accounting once you actually go and make any accounts for any company, because here is something you record in the narration what is very important. Like, for example, a company may be having 2-3 bank accounts. So it is here that you write that bank account. Suppose you have paid somebody through check, then it will be written that Mr. A had been paid check bearing number so and so, the check number, of the current account SBI Bank or saving account of OBC, and so on. So, you make a particular information, you write that information, you at times also write the cash memo number or the invoice number. These transactions therefore are authenticated by the narration which you write at the end, and therefore narration forms a very important part of the journal entry. Journal entry, as you see, that suppose Ram has started a business, then let us see how this transaction will move. We'll also see that how our accounting conventions and principles are also used over here. For example, entity concept. Business and businessmen are two separate entities. We'll see that how this gets functional over here. Now, businessmen and the business are the same things. We feel it is the same thing, but for accounts it is two different parties, because accounts is going to capture the transactions of the business and not the businessmen. So, not the personal expenses of Ram. We are not concerned that once Ram leaves the office, how he is spending his day, or what kind of expenditure he is going to do, for how much he had his meal for how much he has purchased his shirt for, and so on. We just need to record all those transactions which are pertaining to the business of Ram. Therefore, the money which has been given to the business is considered as a loan from businessman to business. So, the first entry therefore is cash account debit. It is a real account. So, money has been received by now that money which belonged to the personal saving account of Ram has been given as a loan to the office, to your organization. Let's say suppose that the organization name is Measures Ram and Company or Ram. The cash account debit 25,000. It's a real account debit. What comes in? To what? To that this is a capital firm. Okay, it is a special loan from the person. So instead of writing just the name of the person, we record it as a separate amount. We give it a special name to it, that it is a capital. It is a equity capital. It is something which the owner has employed, which we always need to keep an eye upon, that whether it is increasing or decreasing, because that is what the businessman is interested in, to increase it. The addition into it is the profit. Deletion from this, or anything which gets subtracted from this, is expense or drawings, the money which the owner has taken away, or anything which is an addition is the addition to the capital, additional capital. Okay. So, being cash invested to the bank. Now, therefore, let me summarize it, that you need to keep an eye on the accounting. What's accounting? Branches of accounting, subsidiary books of accounting, concepts and conventions. You need to understand the ledger, the journal, and later on the rationalization, etc., will be done on the basis of all these aspects. So you need to capture and understand the accounting process. Only then you will be able to understand what we aim at, which is international accounting standards. Thanks.